even before Italy got people's attention over the last few days, there's just been a lot of sort of pockets of anxiety. Argentina and Turkey and South Africa and the whole EM complex. Is there something bigger going on, or is this still just sort of isolated stories?
I mean, something bigger always starts with isolated stories. I mean, if you go back even to the housing crisis, you can see that the initial subprime developments were isolated. People said that they were contained. I mean, I don't know whether it's the start of something bigger at this point, but one of the things that we've been saying is the EMs are the weak link of the global economy for a while, contrary to what a lot of people think.
Yeah.
And this is not, I want to be very clear, this is not the conventional EM crisis. A lot of people, the moment you see some problems in EMs, they immediately look back, oh, is this 1998 again? No, this is not 1998 because this is not a combination of peg currencies with current account deterioration and hot money flows combined together and short-term borrowing. And that's not the situation right now. What you have is a fundamental problem for EMs where they have a growth challenge, which has actually been surfacing since the crisis, but they have not been able to address it. Initially, they papered over it by losing their export their exports peaked out with respect to the developed markets, right? So they had to now compensate for that by finding domestic sources of credit, domestic sources of growth, which means you need domestic sources of credit. And they were able to do that for a few years, but then they ran into problems of both the current account deterioration as well as domestic credit problems around 2012-13 that started to surface first. And initially, it started with the taper tantrum showing it up, and then 14 through 16, it showed up in a much bigger way.
So just let's back up. So this is not about some external liabilities per se. How is then, if we were to see a further deterioration, how would we see it look versus what a sort of traditional EM crisis looks like?
So what we will see is the EM investment, private investment, which has been weak in any case, is starting to tail off again because growth is not simply showing up. Number one. Number two, what it does then is the capital flows start coming out because the capital flows are chasing growth in the EMs. That's why you go to the EMs. And then it puts pressure on their currencies, not because of a flight from the typical current account flight. And then because their inflation tends to be very closely tied to their currencies, even if they don't import and export a lot, like take Brazil as a perfect example, then their central banks are forced to tighten policy. And when there is currency flight, it becomes more difficult for their governments to also finance, even if they are doing domestically, because this capital flight tends to take job on the government. And so then you have an economy where the government is forced to do pro-cyclical tightening of fiscal as well as monetary policy, and that's where the EMs get into trouble.
So growth just gets clobbered in that situation.
That's the real problem. The real problem is they have not found a solution. Past 20 years, one of the staples of EM growth was growing share of developed market exports.
Right.
That growing share of developed markets, their exports.
So obviously a lot of attention paid to Turkey. Who else has a profile the likes of which you described that is particularly vulnerable in this current environment?
Well, you know, I mean, Turkey is an extreme case with a big current account deficit, but even take India, for instance, right? Exports have not been growing. Now, if you look at, and I'm generally bullish India, but even so, I mean, if exports are not growing, and if the domestic economy grows a little bit faster, you tend to see the current account deficit widen and the rupee come under pressure, and then the Reserve Bank is forced to tighten, and even the fiscal policy is now comes under question. So and the current account has been worsening. Partly it's because of oil, but it's partly because of the domestic growth is strong, and it tends to lead to more imports.
And then real quickly, how does the rise in oil price, that's caught a lot of people off guard this year. How does that factor into things?
Okay, so there are two sets of EMs, right? I mean, of course, the oil exporting ones, Russia and the Middle East. But a lot of the other EMs, especially the Asian ones, are net oil importers. India is a very big one, but even Thailand is a big importer of oil. So for these countries, I mean, so much of their fortunes are tethered to oil, you know, and especially India.